The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Okay, we're going to start the show today by the first chart I posted in here is a picture of downtown Mumbai, India, showing you the internet connections. Actually, folks, what that is the 1899 picture in New York City of the telephone lines that were being put up. Boy, it's hard to believe now that they have a telephone that you can actually carry in your hand. Boy, one of these days they'll even put a camera in it. I'll tell you, it's amazing what those things can do. Someday I'm going to buy one just to see if it works. But I have never done any social networking, and I don't do any texting. That's caused a few problems along the way, but I'm just not, they're going to have to drive me kicking and screaming into this. They did the same thing with color TVs. I didn't think they were here to stay. I didn't think microwave ovens were here to stay. I didn't think the automobile was here to stay until I got to be 16, and then I realized it was an indispensable tool. Let's talk about the markets a little bit, okay? The first chart that I'm going to post in here, I don't do Facebook, I don't do LinkedIn, linked out, none of that stuff. Sorry. But we're going to take a look here at the euro versus the US dollar because we are at a very, very critical level. As you can see, we've been in this down channel that we broke 2 days ago, and now we've come down and we've made a perfect 61% retracement off the low of January the 4th. That's also a perfect 786 retracement off of the, let's try it again. It's a perfect 786 retracement off of the low of January 4th, and it's a perfect 61% retracement off the low of December 31st. So it's very, very important. Now, we hit it exactly last night. 108.53 was the number, and I believe that was the exact low in the euro last night. We've rallied about, maybe 30 pips off that low, but not too much, not too much action as of yet. As you can see, this market since, early February around the 10th, it's only had one 2-day rally. That was only about, how much was it? It was not even just about 100 pips. And now we're, down in this area where it's major, major support. So what I wanted to do was to try to just show you the long-term picture here in the dollar. This comes from one of our friends up in Colorado. He's so snowed in that all he does is trade and do charts all day, which I guess is a good thing because he's making a few bucks, so that's a good thing. So anyway, we're going to take a look here now at the long-term, this long-term chart here. This is the long-term weekly chart in the dollar index. And as you can see down there at the very bottom, folks, back in 2011, there was a guy up there in Clearwater, Florida, in suite 618, if you can believe the number of that suite. Tom O'Brien was talking about King Dollar. And as you can see, we've had this tremendous move. And folks, this is actually the first, we had an ABCD structure in the dollar index finishing in 2014 around May. And this is only the second one in 5 years now. This is only the second May, and this is a pretty major correction because it's taken almost a year. Yes, it's taken a year to complete if it can get down here, and I'm not sure that it's going to get down here. I'm just saying that there's a possibility that we could get back to that 92 to 90 level I don't know if we're going to get that far back because we're trading above 100, but this is a possibility that could be happening with the U.S. dollar. So we got to pay attention to it. We're at a very critical time in it right now. There's just no other ifs, ands, or buts. And let me show you the pattern that I'm looking at. That and this is a little bit longer term, so I don't want anybody to get excited about it or anything. But give me a second here. I put it right here. I know it. I put it right here. Where are you? Where are you, little chart? Why do they hide from me? I don't understand. There's got to be an easier way for me to do this. I categorize them. I put them in order. I give them the right names, and they still disappear. This is not fair, but life's not always fair. Let me look and see. Oh, boy. Doggone it. Where are you? This is really frustrating. Okay, move on. Next question. Judge's ruling. We'll get back to something important. Let's go up and we'll take a look at the we're going to take a look at the stocks. And let's do gold first. Everybody has an interest in gold and silver. And then we will get on to the next one. Here's the one that I wanted. Bear with me here. Say, I found it. Just takes me a second. Okay, now this is the U.S. dollar, which is basically the inverse of the euro, because the euro is 53% weighted in the dollar index. Now, if you'll notice, we're in a slight downtrend from February because we've had some lower tops, but we've had higher bottoms. So we're basically in a really long trading range through here. And as you can see, we are right up against the 61% retracement. That's just the opposite of what we're looking at in that other chart. So that shows you the importance of where we are. Now, if this is a top, i.e. a bottom in the euro, what we're looking at here since December is a 135 lower top pattern. That's the pattern that was popularized by Roy Longstreet. So keep that in mind because that's a possibility. And remember, when you do pattern recognition, folks, you're dancing with the devil because you're at the moment of truth in most of these things. And so when you're wrong, you flat got to be out of the dance. Otherwise, you're going to be in big trouble. If we take another look at one of the another large cross rate, one of the big six. We'll look here at the British pound. And yesterday I did this chart because it looked like we were getting ready to have a little bit of a rally here, which we did. We actually went a little bit higher last night in the pound. We got up to that 140 level. We went up to the 786, and now we've started to sell off. But there's a potential here for a 3 drive to a bottom pattern here in the British pound. And as if you remember from our good friend Jim Bartololeone, when we looked at the British pound on some of the longer term charts, we had some price objectives that were, just a little bit below these levels that we're trading at right now. And so we want to be able to, see if we can actually get down to that level as of yet. Now, maybe you missed this thing. I don't know. We'll just wait and see if it's going to do it. But the British pound still has a chance to get down here below this well, we've been below the 139 level already, but we got a chance to break it one more time to break that 138 level, and that's where you'd want to be watching it because there's a possibility that we could, continue going a little bit lower with that. Wow, first break already. Well, I was bluffing most of the time trying to find that chart. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, and we're talking about the U.S. dollar, and we're talking about two of the major cross rates, the euro versus the U.S. dollar and the British pound versus the U.S. dollar. Folks, when they talk about the cross rates, what they're basically looking at are the crosses between any two currencies. Everything's usually based versus the U.S. dollar. The big six are the euro, the Swiss, the pound, the yen, the Australian, and the Canadian. Those are the big six. But there's a total of about 22 really actively traded ones. Now you have crosses between the Canadian and the euro, the pound, and the Swiss. I mean, you can just get all kinds of extrapolations, but I basically focus on the big six. I can't look at any more than that because my little mind doesn't assimilate it that much. And that's enough because that'll get you moving pretty good. Now, the chart that's up there right now is the chart that really shows that 135 lower top pattern that we're looking at here in the dollar index. This is the flip over of what the euro looks like. So this is why we're at such a really critical level. The euro has to come out of here pretty strong for the dollar to weaken a little bit. Whether that's going to happen or not, I don't know. But, you know, it's been down sharply now for 2 straight weeks without much of a bounce. And so it's due for a bounce just on an oversold condition. But that level at 138 is certainly 138.50 is certainly a very, very important level. Now, I know most of you don't give a hoot about the currency, so we'll get into something that you like right now. I think we're going to take a look here at the gold market. As you can see in gold, we did make that Gartley pattern on the 26th, and actually on the 27th, down at 1213. We then rallied our harmonic number up to the high that we hit overnight so far, which is 1249, which is within $2 of the exact harmonic number. We have not taken out the high. of the 24th, nor have we taken out the high that we made way back on the 11th when we hit the Fibonacci number on the weekly charts at 1232. So we want to watch that. What's important is silver is the the wicked stepsister of this group. So we have to sort of keep an eye on that. And I wanted to just to show you what it looks like. We'll get to the stocks in just a minute, but I do want to go over the silver to let you folks see it, because it's such a different chart. I mean, it's just like night and day. We had the same Gartley pattern hit, of course, but as you can see, we've had very little rally since that Gartley pattern was made. You can see we've only rallied 30 cents, off of the bottom, to the 50% level. And if you stop and think, silver, if it was running tick for tick with gold, which many times it does, it would be trading at $15.60. It would be up another $3,000. So people that are buying gold and selling silver as a spread are doing pretty nicely, because gold is so much stronger than the silver. So we'll watch that very, very carefully here and see what's happening. Now we're going to switch over here a little bit. I've got to jump around because I've had some questions, some people about some stocks that everybody wants to look at. And we have one from one of our favorite listeners from La Paz, Mexico, Priceline Charlie. We're going to take a look at one of his favorites. The man has a crystal ball when it comes to Priceline, it seems like. But you'll notice that when we made the big double bottom down there at the $950 per share level, that completed, several major patterns. And if you'll notice, the market had that huge rally, and it got up to that 1274 level. Closed last night around 1265, and it's been hanging here for 2 weeks, hugging that little green trend line there that happens to be called a 20-man line, because it can act like a fulcrum to push things down or to flip things up. So it's at a critical level here in Priceline. It has some huge gaps, as you can see, but this is the largest gap that is left in the past 4 or 5 years. It had a gap of almost, it was over $100 a share in one time, which is only 11, or I think it was 11%. But when you're dealing with $1,100 stock, that's still one heck of a lot of money. When I started trading stocks back in '65, that was 1965, not 1865. Anyway, we will be looking at, the reason why I was saying this is Superior Oil was trading at $1,200 a share. And that was just really amazing. That you could see the ticker tape go across, and it would trade five lots, 10 lots, nothing less than 5 lots. That's all that it ever subscribed to. But that's what we're watching here. So anyway, that's what's happening with the Priceline. We've had a let me get back to my train of thought here, because I want to get back to the stock market here and go over a couple of these things that we're watching here for the market today, because these are the things that make me interesting to try to talk about. And here we are. We're going to get to the stock market right now and open it up here and take a look at it. Here's the S&P, and you'll be able to see here that we've had some pretty good moves here overnight. We originally thought that the market, we took out the highs yesterday. Let's try to go back and think this through before my words start slurring. Yesterday we got up to just a little above the 61% retracement, and then we came down. We didn't quite make the ABCD pattern to the downside, but we're basically looking at a market that I believe we're heading down another 25 points down to the 1917 level. However, if we can get above 1959 in the S&P futures, then I believe you've got a chance for the market to do a whole lot better. Now, whether that's going to be the case or not, I'm not sure, but that's the way it looks like from just looking at these charts of what I'm looking at right now. The bond market, that's another one that's very interesting and that we have going on right now, because it is the same type of a situation here that I've got to figure out a way to, here we go. This is what I want. I got the bonds right now. Okay, here's the bond market as of about an hour or so ago. As you can see, we broke below that trend line. We did not take the lows out of the 27th, and now we've popped back up above that line, which was around the 165.25. We're trading at 166.06 right now. So that's telling us that there's been some pretty strong support here in the Treasury bonds, at least from a short-term perspective, because we were not able to take out those lows of December 27th. Let's try that again. February 27th. So I'm a little punchy, folks. We've got our best friend here in our neighborhood, Sarah and I. Our neighbor is Kelly, and he's 92 years old today. And we basically, we're not his caretaker because he can take care of himself, but we check on him. And yesterday we had to take him over to the emergency room last night, and because he fell and he banged up his hip. He didn't break it, he just bruised it, and so I'm a little tired from that. But that's no excuse. I'll be back. Right or wrong.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I've posted the chart of the crude oil into the room here so that you could take a look at it, because it's got a very nice pattern here that makes it look like it wants to at least go higher, because they're hitting this with every day it's a barrage of bearish news, and yet the market is climbing a wall of worry. And Lord help the shorts if they ever have something positive ever hit that market, because there's not going down. And that's you have to ask yourself the question: if you're getting bad news all the time, you can't understand why that's happening. That's one of the reasons why you want to be watching the by the way, just as we were talking here, I guess there was a report that came out, because the euro just went down and touched that level again at 108.53. That was the exact number that I'm looking at. It's trading at around that level right now. So we had a real critical level here in the euro. Along with, everything's critical, but this is particularly critical because of all those numbers coming together. Because remember, the long-term picture on the euro still tells us that we're heading down towards the 99 level. That's a really clear, weekly chart. In fact, if it doesn't get there, I'll be really surprised. But as you know, I'm surprised quite a bit. Now, the next one that I wanted to talk about, we've talked about before, and this market is continuing to make new lows, so we're getting close. I believe somewhere in this 165 level in natural gas is where we're going to be looking at a potential bottom, but it's not quite ripe yet. So you can see the equal moves that we've had. We're now extending down past that. It is a 3-drive pattern, but it's not completed. What I'm waiting for is I'm waiting for a pattern on the 4-hour chart or the 1-hour chart to confirm that a possible bottom is in. And what I do is, I'm not going to try to catch a falling safe down here with this one, because it's in such a strong downtrend. I will wait for the market to have a little bit of a rally, and then buy that first Gartley pattern, following the bottom. And those happen a lot, folks. I mean, the market, when it goes down, the shorts, are in control and the bulls are scared to death. So the slightest rally that fails, the shorts come back in and the bulls get scary, and it makes that final little Gartley pattern that allows you to come in and buy the thing. So we'll see. Now the euro is a different situation, because we have so many numbers coming together here. They might not work, but this is what you wait for. I mean, you have to risk about 40 pips at this level, so your stop would be right about that 108.05 level, somewhere in that ballpark. But this is what you wait for. Whether that's going to happen or not, one has to wait and see. But we'll cross that bridge as we come to it. We'll take a quick review of what the markets are doing right now. We've had a pretty good early morning move in the S&P's up around 15, 16 points. Dow's up about 110. We've got gold down about $8 from its high. Canadian dollar is in new low ground. The Swiss actually made a slightly lower low again, at that 108.53 level, now trading at 108.57. So that looks very, very, very interesting. Now the Treasury bonds, even though we did break below that 165 level. Now you folks are probably watching the June contract. Now what I do, we switched over from March to June today, but I still watch the March until the end of this week. That way I don't have to mess around, fixing the data. So you can easily trade it because it's such a large market. That's not a problem. But it is the lead contract now is going to be the June contract. We'll switch over to the currencies later next week, at the end of next week, and then of course the S&P we switch over there, I believe, on the 12th, as I recall. So it'll be very, very interesting to see if that's going to be the case or not. Now regarding the stock market, I believe, and this is my opinion, of course, there's a great deal of resistance at the 1958 level, which is the 786 of the whole down move. Now, we've had some really big swings, and a lot of it is related to the Federal Reserve coming in and pumping in money. Shane Smolian, our good friend from wolftrader.net, has illustrated this to me several times, how that seems to be working. And boy, whenever they get in there, you certainly don't want to take the other side of it. So that's the bottom line. I have a question about the crude oil. We've backed off about 70 points from our early morning high. The first really strong support comes in around the $33 per barrel level. If you look at it over the last 5 or 6 days, we've been in a short-term uptrend, and we've had higher bottoms and higher tops, which basically defines an uptrend. And the next major support is down $1.50 from the highs, and that's around $33 per barrel. This has been one of John Logan's favorite picks, and he's certainly been spot on using his TAS profile to pick out the bottoms in these things. So we want to watch it very, very closely. Okay, now we move on to the we've covered the crude oil, we've covered the currencies. Time is up. Thank you for joining me. No, I'm just teasing you folks. I wanted to go back and just review something in the utility index, because it's such an incredible pattern. This is and we've had so many of these ABCD patterns form, and that's why I don't believe we're going to run up and make a new high in the market over last week when we hit that 1981 level, I believe, in the S&P, 1968 50 level in the S&P. I don't believe we'll get above 1981, which is still a long way. It's more than 200 some points in the Dow Jones, but whether we'll do that or not. The key level today, from my perspective, is the 1985 level. Did I say that right? No, I did not. It's 1958 level. Boy, not only am I tired, I have dyslexia. Okay, 1968. That's this. Oh, God. 1958 is the level that I'm looking at. That is the 786 retracement of the move that we had over the last several days. So keep that in mind. That's what we're watching. We have a lot of patterns that are telling us that this market made a major top on Friday, the 27th and 26th, and we certainly have to respect that, because that's what's happened thus far. The patterns have been very clear. That doesn't mean they're not going to work, that they are going to work. It just means that that's, basically what we're looking at. The one I posted here just now is the NASDAQ. We've had some pretty good corrections during this time, but we still have had a pretty good rally, since February the 10th. And so when you rally 5 weeks in a bear market and it doesn't go very far, you should, sort of pay attention to that. That's my opinion. I listened to John's show along with his guest Joey Johns, and about the rally we had in China, and that's not what we're trading here, folks. We're trading U.S. We're not trading China.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
It's 2016, and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, folks, and I believe we have our special guest, Rich Anderson, on the line. Rich, are you there?
Hey, Larry, I'm here. Sorry about that. I didn't have my headset on.
No, not a problem. We'll have you on maybe later in the week also, because I would like to cover some other things. But the main thing that I would like to talk to you about today is the situation in the corn market, because I'm looking at some cycles here that end up right around the 8th, which is our solar eclipse and new moon, which corn and wheat and beans, they usually move pretty good around those levels. What are you seeing and what are you hearing now in the grain markets?
Well, last time I was on, I told you that the grains would have trouble doing much until the USDA Ag Forum, which was in Washington, D.C. last Thursday and Friday. It never fails. Every year they always announce how the farmer's going to plant more grain and more acres of grain, and indeed they did it this year, and cotton for that matter. When the farmer starts to put his money in the ground by planting his seed, that's when the markets get more sensitive. And I think that what I'm looking at is that previous low back there in January 4th, the low for the year is 360 and a quarter. These markets, Larry, have been retesting lows. Look what the stock market did here a few weeks ago. They retest their lows. They like to do that and look for stops, flush and rinse. And so I'm kind of, if that were to occur, if they were to take those lows out around your time frame, I could get excited. The one thing I'm watching closely is the weather. The El Nino in the Pacific, it had started to cool off, and now it's warmed back up a bit, which California really doesn't want, because that would mean more drought for this year. So I'm watching that closely, and that's we're going to need a big catalyst kind of an item, and that would be it. In a normal year, the reserve requirement being lowered in China would have lit these grains on fire, as it did gold, silver, and platinum yesterday. But the Chinese, because of their economy, et cetera, they're lowering their support price for corn to their farmers, and they're doesn't seem they're as anxious to buy. In previous years, they were always anxious to buy. So once they lowered the reserve requirement, the banks had more money to lend, and they were buying more of our grain. That we didn't get that kind of a kick in the grain markets yesterday, unlike the metals. But we're going to need a catalyst. The catalyst will probably be weather. It'll be either too wet or eventually too dry, and that'd be a good time to get her started.
We always have at least one or two crop scares every year since I've been doing this, and that's been 50 years. Grits, do you remember when we first started trading together, corn would have a 2-cent range for the week?
I know. And, I mean, and now you can blink your eyes and it's moved 2 cents. But
That's for sure.
yeah, I just got this feeling that the January low, they'll take that test and look for stops, and then finding none, they'll just think, hey, this is a pretty good value, especially given that it's this early in the growing season, and there's no, they haven't even got it in the ground, much less grown it yet. So there's a long way between now and harvest. And the other thing to keep an eye on is the dollar. The stronger the dollar is, the more expensive it makes our products to the rest of the world, whether that be pork or grain.
Sure. Rich, I've posted a chart into the Tiger TV on relationship between platinum and gold. I mean, it's hard to believe that we've got platinum a $300 discount, to gold. It used to be just the other way around. Any thoughts? Any thoughts on that?
Well, and there's by the way, and I'm a technician, but there is a second largest platinum mine. They're having a little issue with their employees, and because of safety, which rightfully so, they should be dang upset about that. And so that could be an issue. But the primary issue is one of the big things that platinum's used for is catalytic converters. And I don't know if you remember, Volkswagen had this little issue with the United States government and how they were rating their cars, and so the usage has come off a little bit. But at these levels, there's a lot of parts of the world, Asia in particular, that prefer platinum to gold, and they'll see it as a value. It used to have a $200 premium, and right now, because of some fundamentals and usage things in the industrial sector, the demand has been weak. But that'll change, and it's a very attractive metal. I've liked platinum for the last $120, $30, and I think it's going to catch up with gold and eventually go premium again. But we're talking years now, 2-3 years from now, for that.
I saw where I didn't realize this till this morning. I was watching Bloomberg catch up what was happening in the overnight markets, and I didn't realize that that Bugatti and Lamborghini were owned by Volkswagen. I was really surprised. So I think, are you going to sell your Bugatti now that you know it's a VW, Rich?
No, I drive the Audi A7.
Yeah.
But
I don't know what kind of.
So is Porsche. Porsche's owned by Volkswagen too. They got a lot of great brands.
I knew that, but I wasn't sure of the others. Do you know much about the natural gas? Oh, Rich, one question. You remember that gentleman we had from Houston on that was the energy specialist, a really nice fellow?
Kyle.
Yeah, I'd like to get him back on. So later on, I'll give you a call today. I want to get him back on to talk about natural gas, because I think something, whenever markets are going down like this, you got to buy them when they're crying. And boy, they're certainly crying over there. So have you talked to him much, or do you get much information from him on energy?
2-3 times a week I get information from him, but he knows 10 times more than I do on it. All I can tell you is that fracking was a technological change that has caused that market to go from $12-13 per billion cubic feet to now it's under $2. It's staying lower for longer. The fracking in the oil industry is a technological change, and that's going to keep the oil lower for longer. It has to do with air conditioning degrees and heating degrees. The thing I will tell you is we loaded out our first ship of liquid natural gas last week. Now, it's pittance, but eventually, we start shipping out enough of this liquid natural gas, and we'll start to go towards the world market, which is $4 to $5 higher than us. Right now, this is a huge opportunity for all the manufacturing plants and stuff like that. It's just golden for them because they operate for next to nothing. Their energy costs are next to nothing because this natural gas is so cheap. But believe me, I'm watching it too. You got to trade it technically, but there's just there's 4 other plants on the drawing board, the liquid natural gas plants, and so 5 years from now, we'll be exporting a fair amount of this stuff. But at least it started last week. But you got to just trade it technically, and frankly, the spreads, just being in the spreads in that market can be a wild ride. So right now, what would change it is if all of a sudden we had a hurricane in the Gulf or something like that, or if we all of a sudden had a real cold snap. on the weather, because Kyle and the boys, they watch weather real closely, or if it gets real hot this summer, if they're forecasting really hot this summer, particularly in the Northeast where they use a lot of that stuff.
I see. Well, listen, thanks for being on today, Rich. And we're going to have
apologize again. I am so sorry.
No. Hey, listen, we're glad to have you anytime we can. And do me a favor, drop me an email on Kyle's number, because I want to get him back on the show, because I really got my eye on this natural gas also, because, it's oversold. Anyway, thanks for being on, buddy.
All right. Thank you.
You
Trade
bet.
well. Bye-bye.
877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we are getting ready to wind the show up. I posted a chart for the E-mini S&P 500 going over the last few days. You'll notice the little red box that's there over the last 12 to 50, well, no, not even that long, about 4 hours, 4 to 6 hours. You'll notice we have a little head and shoulders pattern there that's very distinct. We have the shoulders are exactly equal in time and price. So if we get above, we break this to the upside, which would be above 1948, that would tell us that we would be most probably heading towards the level that I think we're going to probably make, and that's 1958. So that's what we're watching right now. It's still real early. It's amateur hour. It's the first hour of trading. It's the most difficult for most people when we have this swings up and down really quick. So it's a very short-term pattern, but it's something that we should pay attention to, because on the downside, it would give a price objective on this head and shoulders pattern to 1928. If that does break to the downside, which it needs to get below 1939, and that would set up that particular pattern. Right now we're trading at 1941 and a half. Not a big deal on any stretch of the imagination. The next one is the euro. We did go down and we made the a 108.53, which was the exact 61% and 78% retracements. We're now trading at 108.61. That's 8 points. So if you bought that, you've made your $100. Don't rag on me anymore. I can't tell you any more than that. It's over. No. I don't know if it's going to work or not, but use a stop, for God's sake. Defy human nature, protect yourself. Remember, folks, there's 3 parts of trading that you got to master. First is perception. You got to figure out what you're looking at and why. The second part is the execution, and that's being able to put the orders in and protect your backside. And the third part, which is the most difficult for this old cowboy, is accumulation. In other words, just keep doing it and accumulating it. My personal problem is I make good money, but sometimes I give too much of it back. 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.